UTI FlexiCap Fund. Just like in game of cricket where game plan and strategy is important, similarly in the game of investments, portfolio strategy and prudent investing are paramount to build a robust equity portfolio. And FlexiCap Funds embodies this ethos. These funds are like a cricket team which has a combination of seasoned and young players. Similarly, FlexiCap funds invest across large caps, mid caps and small caps depending upon market conditions. And FlexiCap funds could be a great fit for investors looking to build a winning equity portfolio for a long-term wealth creation. Presenting UTI FlexiCap Fund, a dynamic equity scheme investing across large, mid and small cap stocks. At the core of UTI FlexiCap Fund, it follows a well-crafted and comprehensive investment process called Score Alpha. It is a rigorous and a pragmatic approach to equity investing that focuses on three important segments, that is, team, process and strategies. As a result of our robust investment process and incessant efforts to deliver quality output, our equity schemes endeavor to meet investors' long-term life stage goals over the years. And the investment philosophy of UTI FlexiCap Fund is built on three solid pillars: quality, growth and valuation. Let's understand what's quality. Quality companies are the ones which perform across the market cycles, mitigate drawdown in portfolio returns, rebound faster from economic downturn and operate across market caps. UTI FlexiCap Fund looks at capital efficiency of the companies to determine quality. These companies have a track record of high and industry-leading returns on equity in the past and ability to sustain high ROEs in the future. Tried and tested business models are run by seasoned managements. Second important factor is growth, which signifies long-term secular growth for the businesses. The fund emphasizes businesses that have steady and predictable growth trajectory rather than cyclical and volatile growth. Therefore, the fund focuses on profitability and earnings of the businesses, which is driven by a strong track record of earnings growth in the past with stability in margins, ability to compound earnings at higher than market in the future with strong predictability, while high-quality businesses create economic value. A high-growth business enables compounding of this economic value. Finally, valuation parameter not only focuses on price to earnings multiple but price to cash flow, which is an important guiding pillar as these cash flows are the real source of value creation in a business. The fund also considers the discounted cash flows as the valuation methodology since it can help better capture the earnings potential of high-growth businesses. To summarize, the portfolio of UTI FlexiCap Fund focuses on quality, growth and valuation, aims for sustainable wealth creation in the long run. Let's look at the investment framework of UTI FlexiCap Fund. Investment style. The fund follows quality and growth style, which is biased towards companies generating high ROCEs and strong cash flows. It also looks to invest in companies that can use market slowdown to strengthen their competitive positioning. Stock or sector selection. The fund follows bottom-up approach in identifying quality companies with long runway for growth and non-cyclical in nature. Focuses on microeconomics of the businesses that are part of the portfolio rather than on global or local macro factors. Also avoid market timing in terms of cash, sector or stock calls. Market cap preference. The fund is agnostic to market capitalization. However, preferred allocation of the fund is large cap 60 to 70%, mid and small cap 30 to 40%. Further, the fund emphasizes on selection of mid and small cap stocks as they are the potential alpha generators of the fund. Also, the fund is open to take big sectoral underweight or overweight positions if longer-term drivers are absent or favorable. Portfolio turnover. Relatively low churn portfolio driven by high conviction ideas for long-term growth. Portfolio designed with an aim to survive the market upheavals and ride the upside when recovery comes. Avoid risks which could lead to permanent loss of capital. The fund on the basis of Score Alpha framework is biased to investing in businesses with high ROCE businesses and consistent positive cash flows. High return on capital employed companies or R1 companies are the ones which have generated an average ROCE of over 18% in the past 5 years. Consistent positive operating cash flows generation or C1 companies have positive operating cash flows in each of the previous 5 years. As compared to the benchmark index, which is Nifty 500 index, The fund endeavors to maintain superior profile on fundamental parameters like growth, return on capital, cash flow generation, leverage, etc. across the market cycles. Therefore, the fund has an active share in the range of 65% to 70%, indicating the fund's high conviction in following its bottom-up philosophy rather than following the benchmark. Therefore, the fund's returns could vary by wider margin as compared to the benchmark's returns. Now, let's look at the sectoral allocation of UTI FlexiCap Fund. The portfolio of UTI FlexiCap Fund is constructed with a view of at least 3 to 5 years and conviction on long-term growth, quality of business and ability to generate long-term economic value. Therefore, the sectors where the funds have large exposure to include financial services, consumer services, consumer durables, information technology, healthcare, auto, etc. As companies in these sectors are leaders in their respective segments and have demonstrated resilience in their business models over past business cycles, and top underweight sectoral allocation by UTI FlexiCap Fund. The fund has no exposure to sectors like realty, construction, power utilities, public sector banks, etc., as it is difficult to identify companies within these sectors that fit into fund's investment philosophy. Companies with track record of generating inconsistent cash flow or with poor ROCE profiles are avoided as these businesses struggle to compound or sustain earnings through the cycle. So, who is this fund ideally suited for? UTI FlexiCap Fund is suitable for investors who wish to build a core equity portfolio for the long-term wealth creation with high-quality businesses that have an ability to show strong growth for a long period of time and are run by seasoned managements. UTI FlexiCap Fund follows a focused and disciplined approach by building a portfolio around high-quality businesses that are expected to show secular long-term growth and are not cyclical in nature. Therefore, it's a suitable choice for your core equity portfolio on account of their ability to generate wealth over their life cycle and create alpha over the long run. So if you are the one who is looking for a strong team with a combination of seasoned and young players, choosing to invest in UTI FlexiCap Fund, which has a well-balanced portfolio for long-term wealth creation. UTI FlexiCap Fund, prudent and strong portfolio of quality businesses, focused and disciplined, long-term wealth creation. To know more, contact your mutual fund distributor or registered investment advisor or call 865550 19940.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.